Welcome back to the Dividend Diplomats YouTube channel. You know you got Bert over there rocking the OH.
IO, baby.
Here it is. And you know you're rolling with Lanny, the Dividend Diplomats. We're broadcasting you live from our offices right now, baby. And we are here to talk about another undervalued, cheap dividend stock to buy now.
But before we start adding companies to your watch list, everybody, you know the drill. Smash that subscribe button. Give us that thumbs up. So close to 10K. Thanks, everybody. You know what's coming your way. Oh, yeah, the Dividend Diplomats are going to record a wrestling video for all of you subscribers out there. So everyone, get hyped, get ready. Help us get to 10 freaking K.
Help me help you. Help me
help
you.
I love that movie when it's on.
Yeah, we're back in action here to talk about another undervalued dividend stock to buy right now. We're sliding into the tech sector, maybe an unfavorable stock that people have been talking about. We all know right now the supply chain issues that has been systemic across not just our country, but the world. If you go to try to find, a brand new car, you're not going to, because there are none left, which is causing used cars to go up. And that's because of a lot of supply chain issues. Now, Bert, anything else you want to add regarding that part?
Yeah, I mean, it's interesting to see the impact of all these supply chain troubles trickling through the economy now and seeing the prices go. I mean, you may not have realized these issues 6 months ago, maybe not even 3 or 4 months ago, but now they are really starting to surface. And as companies continue to release earnings, we're getting more insight into the financial impact it's having on companies and your pocketbook as we continue to see inflation and costs continue to climb.
Now, the S&P 500 here, right now in the middle of July is still over 4,300, sitting at near record highs. But guess what? We're here. Bert's here. Bert is here. Lanny's here. The diplomats are here for you, to find you dividend stocks to buy, even when you think there's no hope to add that dividend income to your passive income totals.
We're here to tell you there's always hope. There are always going to be undervalued dividend stocks to buy. You may just have to look harder sometimes than others, but that's what we're here for, and some of the other great YouTube channels out there. Our goal is to help us find ourselves undervalued dividend stocks and then help find you those undervalued dividend stocks to consider, because hopefully we've at least proven to you, since we've had this channel, that we at least put our money where our mouths are. We talk about these stocks, we find these undervalued stocks, and then we will buy them, as you will see in our purchase videos.
I want you to take 5 seconds. If you're on your computer, look down, see if you see any stickers, check out your phones, and let's see what chips are inside of those bad boys, because we are talking about none other than the iconic chip maker Intel Corporation, ticker symbol INTC.
Looking down here, Lanny, Intel Core i5 V Pro 10th generation.
Not the first, not the second, not the 8th, not the 9th, but the 10th generation. That's how long Bert's position in Intel is going to last, at least.
Oh, it's going to last much longer. I'm going to be there for the 100th edition, the 200th, the 300th, the 400th, the 500th.
So we are talking about Intel Corp. Again, ticker symbol INTC. And, even their management and CEO had said this chip shortage due to the supply chain issue could last for years. But one of the nice headlines that we have seen from Intel is that they said, hey, we're investing $20 billion into new infrastructure to create these chips. They're trying to get as many ovens as they can, cutting potatoes and trying to make as many chips as possible.
I think that's probably one of the silver linings here that you're going to see from a lot of these shortages. A lot of companies are going to be reassessing here where they're getting items from, where they're producing, and the fact that maybe, it's time for them to start investing in the plans to avoid these shortages in the future. I've seen several other industries take that same approach too.
And Bert, did you just completely miss me saying about buying ovens, cutting potatoes, and baking to make as many chips as possible?
Oh, no, I didn't miss it. I just kept going.
Oh, wow. Okay. Jeez. That's supposed to be my best man right there.
I'm kidding. You're right, though. You're right.
Don't make me send cousin Johnny after you or my uncle Tony, you know?
Yeah. Hey, you can tell them to take it easy.
Oh, wow. First thing at the table. Okay, okay. All right, but let's get into Intel right now. We're going to talk about the three Dividend Diplomat stock screening metrics plus the dividend yield when looking at Intel. We're going to look at the price to earnings ratio based on that forward earning projection, that payout ratio, aka the safety in the dividend, and the ability to grow that dividend going forward. That dividend growth, how many years, and what's the average growth rate to that dividend? And Bert, what's that bonus metric again?
At dividend yield, once you pass the first three metrics, we know your quality stock. Of course, we're going to look at the yield after because guess what? Is it rising with inflation? You may see inflation going 4%, 5%. Those saving rates on your deposit account are not doing that.
But your pizza crust from that Aldi rising crust is rising,
It always does.
always rises. And as one of our old coworkers used to say, cream always rises. So getting into Intel right now, the first Dividend Diplomat stock metric is the price to earnings. Analysts right now are still projecting $4.62 on a go forward basis. Now, Bert, trading at $56.87 for big chip maker Intel. What's the PE?
Gives you a PE ratio of 12.31. So everyone, just taking a gut check here. Let market well over 45 times X earnings, not cheap by any stretch of the measures, in different industry, but Smucker's, the company we just talked about in our latest video here, was just under 15 as well. So Intel in the chip sector is showing strong signs of undervaluation.
Intel saying, you want a chip, you got it. We are here to be your premier player, baby.
Yeah, maybe they'll take some of those chips you're baking in the oven, Lanny.
Sour cream and onion. Now, get into that second Dividend Diplomat stock metric. Intel pays a current dividend of 34.75 cents per share per quarter, or $1.39 per year. And they actually, still in the midst of the pandemic, increased that dividend 5.3%. So despite the supply chain issues, despite the chip shortages, despite Apple saying, hey, we're going to start doing some of our own chips, Intel says, that's cool. Hey, shareholders, you want more money? Take it, baby. So with that total dividend payout of $1.39 per year over at analyst expectations of $4.62, that payout ratio is not even in that perfect payout ratio range. In fact, they're below it at 30%, which is a great sign. And Bert, why is that so nice?
I mean, what we look for when we evaluate the dividend payout ratio is the safety of a dividend. We want to make sure that these dividends are stable. The company has plenty of room to continue growing it because after all, we are dividend growth investors investing for the long term. I mentioned it, I was joking. I want to be around for the 100th edition of a chip. To do so, the company needs to keep growing their earnings. They need to have room to keep growing that dividend to keep me around as an investor for that long time. And it's great to see with a nice 5% dividend increase during times when they're tough, that the company still has plenty of room to continue growing forward because of that 30% dividend payout ratio.
Plenty of safety, no risk of really a dividend cut. If anything, they're just trying to keep the future promising, as Bert was saying. And Bert, going into that third dividend stock metric, what does that dividend growth look like for big Intel?
Their 5-year dividend growth rate is 6.28%. Very strong. Not going to complain there. Still beating inflation, even as the inflation numbers continue to rise. And they've now increased that dividend for 7 years. So they're starting to build a nice little streak here. Maybe we're going to be in double digits soon. They got plenty of cash, plenty of room in that payout ratio to continue doing so. So let's look at that bonus metric. The company passes the first three. Their current dividend yield with that $1.39 annual dividend, divide that by that stock price, that gives you a dividend yield of 2.44%. Lanny, correct me if I'm wrong, but that still crushes the market, doesn't it?
That's still about 80 basis points to even a full percent point above the S&P 500 right now. The reason why the S&P 500 yield is getting lower is because the overall index is getting higher. The part about Intel, the stock price hasn't moved too much in a 52-week time frame. When you actually look back at last year, Intel was trading in the same 50-something dollar range. In fact, they're actually down 4% year over year. not to say that, oh, Trace these dogs of companies, but how many large mega cap companies such as Intel are down year over year right now?
Not very many. In all seriousness, I know we like to joke around, but you can probably count them on a few hands of how many great companies like this with some of these metrics have not are in the red for the year. It's incredible, especially when we lay out the numbers and lay out the metrics here for Intel.
I mean, heck, even IBM stock is up over 16% year from last year to now.
Should tell you everything you need to know. If only IBM had the same growth rate as Intel, I would kill for an IBM increase the same as Intel.
So Intel right now, it's got all the right metrics in summary, and a below the market price to earnings ratio at barely over 12 times earnings. A payout ratio, it's extremely safe at just around 30%. And Bert, what are these other two metrics?
You got that dividend growth at 6.28%. You have the consecutive dividend increases of 7 years. And then Lanny, finish this off here. Bring it home. What is that dividend yield? What is that bonus?
Dividend yield, again, is 2.44%. So when you look at the growth rate plus that, you're looking at almost like a 9% factor. But given that the hopeful supply chain shortages at the severity are behind Intel and behind all the other players that are impacted, which is pretty much, a lot of any sort of company that's producing things, I think that the worst is behind them, and we should see only improvement going forward with Intel.
Yeah, the one thing that I want to keep my eye on here is one of the news stories that came out over the last several weeks was their delaying of one of their new server chips. And as you read more about it, you see that, yeah, they're going to be producing a little bit later than expected. They're going to start production in 2022 rather than the end of the year as they were expecting. And yes, Intel crushes that market. And the article was saying they have 99% of the market there. But I mean, yeah, they dominate that market, but is that going to allow some of their competitors to sneak in there too? How's the chip shortage going to play into all of that for Intel and the competitors? There's still a lot of question marks. But my takeaway was they're going to keep pushing this new chip going forward. They're going to build this new production facility to help, they're going to keep pushing a lot of things forward. So that's what I liked when I was reading some of this news here about Intel, even though the market may not have liked it the same way.
Where you fall down 7, you get up 8. So with Intel, I mean, they also announced in that earnings release, on top of that though, Bert, too, I have to say that they were raising their full year guidance in 2021. So I'm very optimistic on Intel. In fact, though, based on that earnings release, the analysts are still at the top end of the range, which I'm very curious once the next earnings release comes out to see why the analysts are expecting that top $4.60 something percent range right now.
Yeah, there's a lot of good stuff, and the more numbers, the better, the more informed decision you can make. But honestly, all you can do is look at the numbers today, and hopefully we've at least demonstrated to you in this video why Intel is showing strong signs of undervaluation when we run them through our stock screener.
Yeah, so based on the metrics alone, you should keep an eye on Intel right now. Keep your eyes and ears glued to the next earnings release. It may not be a bad time to initiate a position in Intel based on the low PE, safe in the payout ratio, decent yield above the market average, and a consistent grower.
Yeah, at least I know for me, my technology exposure is always lower than what you'd expect. So I'm always looking for good opportunities to add. So yeah, Intel for me is going to definitely start moving and sliding up my watch list here. To your point, I'll keep an eye on them. I'm not running to buy them tomorrow. You're not going to see that in my purchases most likely unless there's a further price depression. But hey, I'm happy we went through the exercise, and I'm excited to see what happens with Intel.
Guys, let us know what you think in the comments below. If you haven't already, give this video a thumbs up so we can keep cranking it out to as many people as possible, because guys, we are on that road to 10K, just like we're on that road to WrestleMania. And we really want to get there because gosh darn it, we are so stoked to get there. Again, give us a subscription as well so you can keep every tab on Bert the Hurt and Lanny over here from the Diplomats. Bert, any parting words?
Thank you guys again. And please, we read every one of your comments. We want to make sure, we love seeing the stocks that you suggest for us to keep looking at because it helps us find undervalued stocks to buy too. So make sure to put other undervalued stocks there too.
we'll have to piggyback on that. And you guys know that we try our best to get every video done. So we have a laundry list right now. It's a fun laundry list, but we do need to crank out a lot of dividend stock analysis videos for you guys.
Yep. Is there anything else, Lanny, or you want to send them off?
That was Bert the Hurt, and this is Lanny from the Dividend Diplomats. Over and out.